Hey everybody, welcome back to the channel. Today we're answering some of you guys' burning trading questions, and this will be fun, so let's do some questions. If a system or strategy stops working, what is the solution to not blowing an account? How to safely or control big loss or drawdown? So there's a couple questions that are similar on this list today that I think might be interesting here, and the echoing question seems to be, how do you know if a strategy is broken? How do you know if something is worth sticking to or bailing? And to me, the answer to this question is going to be heavily dependent on your back testing. You guys would be surprised. I've worked with a lot of traders. I've spoken with a lot of traders. Very few people have actually spent the amount of hours that are really required to learning to trade in their back testing portals. For this, I do recommend one of our favorite, this is not actually sponsored. They've sponsored us in the past, but Forex Tester 5 is genuinely one of the best back testing softwares I've seen out there. Check them out if you want to do some back testing. But for knowing in terms of your own personal trading, like with a strategy, you're like, well, this thing is not going well. How long do I keep trading this while I'm losing my money? That confidence is only going to come through back testing historically and knowing your limits as a trader. So for example, let's say I have a strategy and I've back tested the crap out of this system for years and years and years. And I know that within a normal 20-year period, last 20 years or whatever, that I've tested this concept historically, I've seen a drawdown at one point of 50%. Well, if things go to 50%, that would be still in the realm of normal. But if things go to 60% drawdown, now you've reached the point where it's not a normal drawdown. Something about the strategy may have changed. You need to know before you place a trade what a normal drawdown for your system or strategy is. That way that when something bad happens, you know you've historically seen something like it before and you can know what to expect, most likely with your strategy. And if something different happens, you know that something may have been broken, at least with your strategy. I wanted to jump in and take a moment to thank today's video sponsor, which is Bybit. If you're not familiar with Bybit, they have just launched MT4 for traders, and I know a lot of my audience loves MetaTrader 4. If you're interested in checking out their broker, there will be a link down below in the description, and check it out. They have some really tight spreads, no dealing desk, very, very low trading fees in general compared to the higher fees that are out there for some of the other brokers. They have awesome, awesome spreads on many different assets that are tradable on their platform. They also have a copy trading ability where you can actually track some of the best traders. For example, 𝗀𝗂𝗯𝗀𝗀𝗰𝗍𝗂𝗍𝗂, Crypto Ninja, Blockchain Pro. You got all these different traders that you could just take a look at and see their performance and choose to take a look at their own trades or even copy them if you choose to do so. And of course, they also have a major summer blast off event going on where you can actually get up to $4,000. They said that there is actually up to $4,000 in deposit bonuses available to traders. So take advantage, use the link down below in the description. The first 100 people to use our link down below will also receive a $10 bonus as part of the $1,000 giveaway. Good luck. Similar question from Jeremiah. How much of a drawdown should be tolerated before changing strategies? I know there isn't an actual number, but I think this is still a very good question. Thank you for your analysis. So similar concept, right? You just need to know within your own testing, your testing is going to give you the answer to this. How much drawdown should you expect? Well, historically, I usually see an average of 15% drawdowns a year. Okay, well, if you start seeing averages of 30%, 40%, something may have changed. You may need to consider changing strategies. But the only way you're going to gain confidence and knowledge about your strategy is through testing it historically. I would like to know if at any time have you thought about the idea of expanding your A1 trading company to Spanish-speaking people? If the answer is yes. So I appreciate the question. I don't really think so. We've never really thought about it. Maybe in the future, if we get much, much bigger, we may open up a whole Spanish side of things, but that would be much down the line, I think, once we get much bigger. We have a really large English audience. I'm sure we have a lot of people who are also Spanish speaking or people of all languages, probably French speakers, Spanish speakers, all sorts of places. But maybe in the future, that is something that we'll consider. That's an interesting idea. I haven't thought about that before. What's your future plan, says Boss Man? Do you see yourself trading actively in the next 5 years? If not, what areas of income do you plan to pursue? Boss Man, great question. So I personally plan to trade for really no end in sight. I can trade the rest of my life. I'm not trying to jump into trading and treat it like, oh, I'll make my money and then I'll get out in a couple years. For me, trading, low risk trading means trading for the foreseeable future, 10 years, 20 years, 30 years, 40 years. I don't know. I hope to be trading in 30 years. That would be really cool. Just low risk strategies. I'm not trying to make the bank, tomorrow. I'm trying to do this for a very, very long time and compound gains for as long as I possibly can. The nature of trading is that it tends to ramp up over time as you compound and get a bigger account. So the bigger I can compound and continue to do that, for me, the future is to continue doing this as long as possible. In terms of a company, I hope that we can continue to build software tools. We are, a software team here in Atlanta, Georgia. We build software tools for traders. Like, for example, the EdgeFinder will pop up some images on the screen. This is our tool that we've been working really hard on. We build data visualization tools for traders. That's our primary source of income. We sell those tools to people who are interested in data visualization. And that's how we're able to sponsor this sort of content and all the projects that we're doing here at A1 Trading. So I plan to continue to grow that as well as my own trading alongside of it, which benefits from all the cool software tools that we're working on. It's kind of the best of both worlds, and I'm really thankful for my job. By the way, if you'd like to try out the EdgeFinder for free, here's how you can do so. Down below in the pinned comment section, there will be a link to send a message to one of our team members. If you click that link and send a message to one of our team members there with the word EdgeFinder, we'll give you a free copy to try it out. Check it out down below, and I hope you enjoy the tool. We've been working really hard on it, and I think you might really like it. Check it out. I need some more motivational type videos, as I am a consistent Forex trader who has never earned a penny instead of only loss. It's not because I used over trading or used bigger lot size. It is because having insufficient funds to trade. I know it takes money to make some money, and no one is going to shower money on me, but how do I save my trading career with a small amount of funds? So this is like one of the most common questions that I get from people about trading is like, I don't have much money to trade. How can I make it worthwhile? And my general response to that is, if you have a small amount of money, if you have like $200 in an account, you're never going to make a lot of money from that account unless you gamble it and get really lucky. But it's not all doom and gloom, because there's several avenues to becoming successful in trading. All of them take time, but here's some examples. Let's say you have $200 now. If you have a good career path and you work hard and you have a job, maybe you like your job, maybe you don't like your job. But either way, if you have a solid income source and you can grow in that income source, maybe get a promotion, continue to work very hard and, rise in the ranks and make a better income for yourself, longer term, that can be deposited into accounts. And if you're learning the skills and you're getting profitable through learning from my channel or other channels, or perhaps you're just back testing and spending the time that you're needing to spend testing your concepts and learning, over time you can compound and actually make a generous amount of money from your trading. It's just going to take a while. Conversely, this is not the easy answer and not a quick answer either. If you take the time to learn the skills, you could consider going for funding programs that are out there. People or investment groups will essentially put money on your trading performance if you can prove that you're profitable, and that is usually something that takes an examination, which does cost money. So all of this costs money. None of this is a short-term fix. There's no quick way to get up and running making money in Forex. It's a lot of work. It's a lot of time. I'm in this game for 6 years now and still learning things every single day. So yeah, take that for what it is. It's a long-term vision. It's a long-term goal. And if you have no money today, that's not the end of the world tomorrow. You can build, you can generate income from your jobs and bring it into your currency trading, your Forex trading, your indices trading, whatever you trade, and longer term, make that worthwhile. What do you think about technical analysis? Some say it's like astrology. If it works, we don't know how it works. Okay, so technical analysis is an interesting one, right? Because a lot of times people will equate it to astrology and say like, oh, well, you're just reading the tea leaves to try and get an idea. Well, here's the thing that I would say is very cool about technical analysis. Technical analysis is reflection of what genuinely is an observable thing. Market prices, whether you're looking at stocks or indices or Forex or whatever. And those price patterns are something that can be recognized. There have been people who have made a significant amount of money from technical analysis using price action, using that sort of thing, and they've done so consistently. So to me, there's a proven method behind technical analysis. Of course, it's very, very up to interpretation. There is a lot of subjectivity to it, but the fact that there have been people and still are people who make money doing it, to me is a testament that it does work. I've used price action for a long time. It's not a magical solution and it's not a money printing machine, but it is a way to gauge price readings in a way that could potentially forecast what's going to happen next. I don't claim that technical analysis is some magical solution. I am a fan of using fundamental analysis, other data sources to sort of guide forecasting when it comes to currency trading, indices trading, commodity trading, whatever you're trading. I don't think technical analysis is this be-all, end-all, oh, you can make $1 million just by looking at the charts. It's a nice idea, but technical analysis is a very competitive place. You have the whole market looking at technical analysis and trying to derive forecastable things, and that's a competitive space. When you get really competitive in markets, it takes away the edge very quickly. And so technical analysis by itself, to me, is decent. It can do nice returns if you're very good at it, if you know what you're doing, if you've spent your time back testing, you found your edges. Within technical analysis, that's one part. But to me, the other half is fundamental analysis, sentiment analysis. And that's why if you watch my channel, you'll notice that I don't just do technical analysis. I do look at charts, I look at simple structure and things like that, but that's about where I leave it. After that, I'm looking at the commitment of traders data. I'm looking at, the fundamental news that's going on in the world, what central banks are doing. I'm looking at rising and falling interest rates. I'm looking at, the GDP growth of different countries and things like that. Those are more tangible things that I can actually then use to build a bias and then go into my technicals and use the charts to sort of place entries and exits accordingly. That's how I use technicals. Technicals are like the last thing I look at to gauge my entries and exits, whereas fundamentals guide direction. That's just my personal style of trading. What is the EdgeFinder 2.0? The EdgeFinder 2.0 is just our second iteration or second release of our market scanning tool, which is the EdgeFinder. It's a tool, like I just got done talking about, all the fundamentals and stuff that I look at is basically a reflection of our team's studies in fundamental sentiment and technical analysis into one market scanner that shows me some of the top charts and ideas based on the principles that we use to find setups. The EdgeFinder, it looks really cool. You can see some more images of it popping up on the screen. This is what it looks like. It's our market scanner that our team here has been working on for the last several months. Well, there you go, guys. Thank you guys for asking some questions. I hope you enjoyed this session. If you want more questions, drop them down below. I'd love to hear some more from you. Ask some trading questions in the comment section, and maybe I'll do a follow-up for more questions next time. Thanks for watching. See you next time. Looks like it's time for your next trading video. Check out the videos here and here for more free trading content that should help you in your trading journey. We try and keep it real here, so make sure to subscribe for more content that is down to earth, realistic Forex trading content. See you in the next video.